we are going to usher in 2023 for the equity markets with perhaps the best-known veteran of Indian markets, Raamdeo Agrawal, Chairman and Co-founder, Motilal Oswal Financial Services, joins us now. Good morning, Raamdeo. I wish you a very prosperous 2023. Thank you very much for starting it with us.
I mean, very good morning and very happy New Year to you and all CNBC viewers.
Thank you. Happy New Year to you as well. How are you feeling about the markets?
Okay, I mean, like, see, it's not, there's no excitement of grossly undervalued market, so you're going to rocket or something like that. So, and then global uncertainties are too many. So, right now it's a kind of a subdued thing, but GST collections are very well held up. That's one data which is, that gives you confidence that things are all right. So, I think things are all right till November, December. So, I think I would believe that 23 will be, we're starting in a very strong note of economic activity, heading into a lot of elections and things like that. And worst of global uncertainties, you know, still the Ukraine war is on. Still inflation war is not over. China is still struggling with the COVID. So I think we have more of the same from 22. And hopefully first half will be somewhat like this. Second half, let's see, 6 months is a very long period.
Yeah, and if we overcome those, then we could have a glorious second half.
I mean, I don't focus that much on you know, where the market is headed. I'm more focused on where my stocks are.
I'm coming to that. I'm coming to that. See, first of all, congratulations. You've moved into a new house. You would know what real estate is like. So tell us if that's going to be, you know, another trump card year, another big year for real estate stocks.
Yeah, stocks are different from the real estate. Real estate itself is very expensive. I mean, at least in Mumbai, what I hear, Andheri, Juhu and all, they're more closer to 75,000-80,000 rupees square foot for a worthwhile ready stock. So that seems to tell me that there is a very good market. Now the issue is how do you execute? How much inventory you can deliver in the marketplace, and how your authorities are really hearing this as a problem rather than as an opportunity to, you know,
to kickstart the economy.
Yeah, so I think if they push the system well and permissions and all the hurdles are being cleared, because if government wants or bureaucrats want to clear the hurdles, they can clear it overnight. So once that thing is done, then it is for the entrepreneur to play the game of quick completion. Consumers will demand. So I think it's...
So should I understand that you don't want to play real estate as one of your top bets?
They're not... See, for me, year of 23 will be practicing consistency, because that's what the wealth creation study we did. Okay, and they are not particularly consistent performers, you know. And so, yes, of course, we'll look at it, some of the bigger ones who are stable, large, and they have the, actually they have the potential to be consistent. But they don't, the way they have played in last 10-15 years, that has not been very consistent. So I think now RERA has come, playing ground is very much more, what you call, certain, I would say, consistent, I would say. So it is for the entrepreneurs in real estate to deliver, particularly the corporate entrepreneurs who are coming. They have a large opportunity to deliver very predictable performance going forward into, and as we see those things are happening, maybe we'll start getting interested slowly into the sector.
Okay, you can wait. You know, our director very helpfully pulled up all the sectors that moved last year and which didn't, and the big trade really was going long on banks and short on IT.
Yes.
What do you think the big trade of 2023 will be?
Yeah, so I was wrong in IT. I was right on the banks. Banks were very clear that yes, it's going to happen. But I didn't know IT will be. But you know, these two are like literally 25% each. Or actually, bank is bigger if you combine private and public. So financials, I mean, lenders are like more like 30%, 32%.
Yeah.
Banks are, sorry, IT is about 23-24% of the total corporate profits. Now, I don't think both can do well together. The way index is constructed, I don't think both can be at a high. I mean, anything can happen in the market, but I'll be very surprised that banks and IT both will be at a high. If bank is at high, I mean, can you believe that people are selling, I mean, IT is down by 25-30% and PSU banks are up by 70%. So that's the contrast you're seeing, you know. So I think markets are rotating, and there was an excess kind of depression in PSU per se, but all the PSUs. Literally no wealth was created. In fact, they were the biggest destroyer of wealth in the last 5 years. And now I think finally enough is enough, and there is some rally in this particular
sector. But it's good to go for more. The banking
looks like, I mean, banks definitely has some more steam, because there's a credit cycle. They've just started lending. they have to get into bad lending before the trouble strikes. And you will know first, you know, when
there is exuberance.
Yeah, exuberance and exuberance will not happen in the same place where it happened last time. Last time it happened in corporate loans. This time, I don't know where it will happen.
So since we're talking about banks, I had to ask you about the HDFC group. You know, we put out a study where we talked about how all the stocks, HDFC Bank, HDFC AMC, HDFC Life, the valuations are looking attractive, and there's been a large degree of underperformance in the last many years. You think the fortunes will turn this year?
This year, I don't know, but it will turn. Because markets can take much longer than you and me can forecast. But if there is a value, if they keep growing at 20% plus and the P multiple remains at 20, I don't think it can stay for very long. Such a credible name, and if there was a fear about the transition, all the change over merger and change in leadership and all, even that will be proven in next, I mean, it's already 2 years, another year or so. I think then people will reassess. And what happens is that there were things which were below HDFC. So they have come up. Now they will be at HDFC level, and market would want them to go ahead, but it cannot go ahead unless HDFC also pulls up. So, you know, it's a relative kind of a situation. My sense is that better days are ahead. In terms of valuation, earnings will come whatever for the sector and the companies. But it is more about in fact, the bigger game in the market, I mean, if you see the rating, de-rating on 12 months basis, is not so much about the earnings. It's about the change in the P multiple. Like say private sector, public sector banks were at 0.2, 0.3 price to book. Now they are at closer to 1 time. And that's why they are 3x, 2x, 5x. Not because the earnings are that much bigger.
You know, there are these pockets which did really well last year, whether it's defense, rail PSUs in general. Is there merit in adding more to these names?
Frankly speaking, I have not done a lot of work, but because Atmanirbhar Bharat and the kind of at border, government's commitment to become much more, Atmanirbhar on defense procurement, and the size of the economy which is becoming bigger, borders are not very, friendly right now. So I think the tailwind is very strong. Now, the only thing is that it's little lumpy, you know. So you have to look at the companies which have done well in the past. And they are all monopolistic, you know. All of them are monopolistic, which are more asset light, you know. But I think, frankly speaking, that could be a very interesting sector to see.
Okay, home improvement as a theme. I mean, you have Astral in your consistent performers list. More like that, maybe Century Ply. I don't know what you think of as home improvement. Serra.
Yeah. See, if Indian economy keeps growing at 6% plus, I mean, like for 23, 24, the prediction is all the pundits who they're talking about 6% plus. If that 6 to 7% it comes, and with that say 5-6% inflation, you're talking about 10, 12, 11% nominal GDP growth rate. And if that is associated with say even 12-13% corporate profit growth, I'm not asking for 15-20%, 12-13%, I think we'll do very well.
Okay. No, it's not over 6, sir. The average is lying between 5.5 and 6, but even then your nominal GDP number seems to be the consensus number. I take your point.
So nominal, if it comes to about 10 to 12, and we match the corporate profit to GDP at 12, because now raw material prices are little lower than last year. So I think there will be a little more recovery on the corporate profit side, and hence it should match the earnings.
Then give us the alpha. That is your comment for the earnings as a whole. Right? 15% earnings or 13% earnings. Where will the alpha? See, chemicals was once a big season, you know, and the alkyl amines and stocks like that. Would SRF, would all these still be a way to go? Where would you see alpha? Sectors, if you don't want stocks.
Sectors.
Or even stocks, I mean, whatever you feel, depicts the alpha well.
Yeah, so, no. What happens is that the consistency which they have shown in the past, they will continue. Most of them, they will continue. So don't go too much away from the ones which have performed in last 10-15 years. The problem is that we are too much focused on future. We don't look at the past. And the guys who have performed in the past, they are the guys who are going to perform most likely. I mean, like not 100%, but 70-80%, those are the guys to look at. Now, if they, say like you said, Astral and all, they have not done well because the polymer prices went through the roof. It could be the time for this die-hard, fast runners, for them to come back. So I would look at them. I mean, the companies which have performed very well, but they are right now literally out of favor. Like entire IT, they have done very well.
Yeah.
So now, is it the time? Is it after 5-6 months? That I don't know.
What about new age tech companies? Is it the time to buy? I mean,
Digital companies, yeah, that's
Nykaa, Zomato,
yeah,
Paytm.
they start studying them because they will change the track. Last year they said growth at a loss. So they were not ashamed of incurring losses. They were very proud of incurring a lot of losses. Now they are saying we have to get into profit.
Profitability.
Like Baiju said, we want to be in the profit this year itself. So that kind of change. But saying is one thing, doing is yet another. And actually making profit to the extent of their market cap. Yeah. See, basically they have 10,000, 12,000 crores cash. So of course, first level of valuation is that they are worth that much. Because outside that, they're incurring losses. Yeah. So to justify, say from 10 to say 30, 35,000, 40,000, that is for additional 30,000, they have to show that they can make that much profit. There's a lot of promise. But we bought the promise last year. But now the life has changed. Today you are saying, show me the money and then I'll give you the valuation.
So would you buy now or would you just wait to see profitability?
I would now, having burnt fingers once, I will look for the profits to be visible.
Okay. Okay. Finally, I want premiumization. We called Bajaj Auto. We've spoken to people on the channel. Everyone's speaking about premiumization.
And two-wheelers?
Generally,
yeah.
Even cars, you know, premiumization seems to be the theme. So would you look at people who cater to the upper class? You know, your favorite, Titan, stocks like that. Is that a theme? Yeah. Or is it staples? What caters to rural masses?
Like, say you said Titan. Titan per se is about not premiumization. Not that much about the premiumization. It's more about from unorganized to organized. Now we know the jewelry market. Yes. You go to any city, they're not number one. Titan is not number one in any city. Yeah. They are number 4, 5. There are 4, 5 local jewelers who are number one. So, I mean, in 30, 40 cities also, if they come anywhere close to number one, I think the size will be gigantic.
Okay. All right. Thank you very much, Raamdeo, and hope you have a superb 2023 yet again. Yeah. Samir Arora, founder and fund manager at Helios Capital. It's always a pleasure and great to have you with us. What does 2023 hold for India? India was the outperformer in that we were up at an index level 4%, whereas the US indices were pounded with 20% losses, 30% losses. Should we continue the good run here?
Well, we should have a decent enough run to be happy ourselves. In the sense, it's possible this year, let's say that China goes up more because people think it's a rebound. But India itself will also do well in that situation. And if the rest of the world does badly, then we will surely outperform. Overall, I think this year, I am starting in my mind on a positive note, because if I see the current issues, mostly related to US inflation and now maybe the COVID in China, the US inflation thing has been going on for quite some time. And in the next 2-3 months, I think by March, they would have finished their hikes and then they would pause for a long time, maybe the whole of this year. But at least it won't be hopefully incrementally negative news. And the China COVID situation, unless it happens to be some variant which is much more scarier than what we have seen, then we have seen this kind of a thing in India and previously in Europe and many other places where it'll run itself out in 2-3 months. And then there'll be massive unleashing of Chinese consumption and travel and all the things that we have seen in other markets. So I think plus minus 2-3 months, both these things would have played themselves out. And therefore, I think this year, at the end of the year, will be higher than today.
Samir, what about that India versus China factor? We had a good, year in 2022. China was behind us. Suddenly, that reopened trade, valuations, etc. Are you in that camp that believes that China will outperform us?
So China, it's already up some 30% from the bottom in October. And let us say it outperforms, which, sometimes what happens is, let's say you are doing Infosys versus Satyam, and then Satyam has a scam and the stock falls 80%. But then for the next few weeks, normally the Satyam would have outperformed after hitting some 10 rupees from a starting price of 180. It doesn't matter much to a long-term this thing. I don't think in the long term China will outperform. But let us say that there is some possibility that people, because they have put so much money into China in the last 10, 15 years or whatever, they won't easily quit and they'll want to play one more round. So even let them play. I don't think it'll be so much at the cost of India. It'll be that, okay, the overall basket has gone up. That is, say, the emerging market basket or Asian basket or whatever, but mostly the way they call it, emerging market basket. And then India may underperform a little, doesn't matter. Actually, in the longer term, I don't think it will. But, when you fall a lot, the rebound can be, quite sharp. Who knows?
Okay. Yeah, but really comparing them to Satyam is taking it. That's
dramatize it and explain it to an Indian poor.
No. Most interesting. But calling that big nation a scam is
historical premiums you're not supposed to see.
No, I take your point. Yeah. No, I take your point that, when you're losing after having invested in 1998 or something, that might bite. I take your point completely. So a bit of a rebound is...
My point is that people say India is trading at a premium to China and this is a record high. That is not because both these countries were performing and then after some time you realize, the Indian market seems to have massively outperformed. It is because China had specific policy issues, COVID issues, whatever issues, and therefore it fell. So it is one-to-one with that. And not so much that both the markets were naturally performing and then suddenly somebody's betting on mean reversal.
Fair enough. Take your point. Now let me come to within India itself. The big bet that everyone had was financials, and they have, obviously fructified. Do we continue to play? That seems to be the consensus. Every brokerage report speaks about financials yet again. We continue to play that bet?
We continue to play that bet, and because I saw your previous interview saying the consensus, the way to do it, then I said, what will I answer if she asks me? And the point is, if you look at the tech sector in the US for the last 7, 8, 10 years, every year you knew Google will do well and Amazon will do well, and they continue to do well for 7, 8 years till they didn't. But I think India, the situation is that this is clearly on a relative basis one of the better sectors, not just now, literally forever.
Yeah.
Broadly talking about the private sector, this thing,
Yes.
like HDFC Bank, Kotak Bank, even Axis, ICICI broadly have done very well, even in long term. So yeah, that sector will do well. Also, if you say separately that the risk today is that whether the US problems are completely over, whether the EU problems are over, which means the IT sector, which is facing that market or that economies. So I would think a locally oriented sector, which is financial, is better even from that angle.
Okay.
All right, Samir, but what about HDFC twins? A couple of those names, Kotak Mahindra Bank. 2022 was a bit of an off year for them. You expect them to get their mojo back in 2020?
HDFC was not an off year. Now it was up 11% or something.
7%, yeah, 7 to 8%.
10.5%, whatever, something. But it was in line with the market or a little ahead.
Yeah.
So actually, at least after 2 years of underperformance, did not underperform the market or mostly anybody's NAV this year. Last year, that. I would think So one more thing is that when we say that the world is overweight and it's a consensus bet, the financial sector itself, that is excluding for the foreigners HDFC Bank, which is still zero in the index. And which is now maybe 5% of the market in absolute, if you do say 100 odd billion by whatever, 2.5, 3 trillion market cap. So that 5% underweight is what makes the people feel that they're overweight. In reality, they may not be that much overweight if HDFC Bank had its rightful share in the index. We are going to bet on that. We have the 3 banks, HDFC, ICICI, State Bank in nearly same number. And we also have over the last 4-5 months, because we sold off IT in August or so, we have Axis Bank also now. So we have 4 banks and there are only 4 or 5 banks.
I just had one follow-up to the point you were making earlier, where you said you've sold off on IT and you're holding on to some banks. But, I don't remember the last time when you had an opportunity to buy some of these large cap IT names 30-40% cheaper, right? Don't you think that at least you should start nibbling into these names? Or are you still very cautious?
Nibbling we might do. The point is, right now we have 0. But nibbling we might do. But the thing is that these guys have to still properly disappoint us. The stock price is one thing. But right now they are not. I think from this quarter, they will start talking about lower numbers and stuff like that. So far, they've been saying that we will get this project and we'll get cost-related projects and other things. But if you look at the US companies, you look at them in cloud, in security, in everything else, these business software like Salesforce, every one of them is having slowdown and the stocks are down, whereas and then EU and then UK. So I think that I may nibble, but I won't nibble before March, April, when we start thinking about them giving guidance for the year. They are not going to do anything great in Jan for me to feel that I have missed out. Plus, I'm not sitting on cash. So it's a relative trade I'm playing, right? That I even bought Paytm, by the way. So I bought Zomato I had. So point is, it's not, we are just betting on a relative thing that which one can go up 10% more than the other.
Okay, now this is telepathy. Huh? You spoke about Zomato. I was going to ask you that. In your Twitter, you had mutual funds mangoing Mafi from their investors for investing in several of the IPOs. Is it comeback time at all? If you have Paytm, would you also go to the others, Nykaa, PB Fintech, Zomato, all of them?
So Zomato we bought before. Zomato we bought 4-5 months ago, whatever the June quarter.
Okay.
Paytm was after the last quarter. So no, right now we have only these two, but we bought a few IPOs ourselves. These new IPOs which are all down, I think one of them is not down. Fusion is not down, I think. But UK Parts and Fusion, but these are all like plus minus zero, because they're just very new IPOs anyway. So they've not had a chance to go down in case they have to. Hopefully they don't.
Okay. You know, the big theme, like we have just discussed, was financials. Is there any sunrise theme? I mean, today morning, many people spoke about metals.
Metals doesn't fit our big picture theme in our life because we have never been able to do well. So when we feel that the theme has done very well and is irritating me, then I'll buy a little and then it'll stop performing. So we don't want to stage yet.
Samir, leave us with one big idea for 2023. Something you're nosing around and may pounce on.
No. That way, our thing is very simple, that we buy 20 stocks and bet that the pool will do well without exactly knowing whose turn it is next. So the best example to see that is if you see in 2021 December, did anybody say that by Varun Beverages we turned out to be up 125% or Lemon Tree turned out to be up 80%? Nobody knew. Nobody can imagine the extent to which stocks can do well. So my one point idea on which I'm going to do a talk is people think that if they buy an idea, that if they have not done well, I mean, if they haven't researched it to the 100% and therefore are not willing to own less than 5%, they may have not done enough work. Sometimes the serendipity works. Sometimes the fact that stats work, that some 30-35% of the stocks do very, very, very well relative to the market. And you have to try and get a larger part of your portfolio there without exactly knowing whose turn it is next. How could you have imagined that Indian hotels will be up 70% in a year? And if you believe that you will only buy stocks where you believe they'll go up 70%, you would never have bought these three stocks. Yeah. But when you do 2% like we did, that was enough. It didn't matter that we did not buy 10 because we never imagined that these stocks could be up so much, so fast in a bad year otherwise. That is the trick.
That's a great lesson. Serendipity also works. That also indicates a very humble lesson that we should be prepared for these accidents.
Not accidents,
pleasant ones. Pleasant surprises. Okay. Samir, have a great 2023. Thank you very much for starting it for us with Elan.